Good afternoon, all. Camelback Trading 2724 coming to you this Monday afternoon, May 4th. And we're looking at the last 2 days of the market profile of the SPY ETF here on Window Trader. This video is going to probably be a little longer because after I go through everything, or as I'm going through everything, I want to break down some specific trades I did, and which was really one continuous trade in B and C period for my room. So I'll get to that in a minute. How do we describe today's market? Well, we could certainly describe it as sellers, after Friday, having a trend day down, even though it was a B shape, having a trend day down, were gapping lower, right? So, number one, they stopped the one-time framing up in the weekly after 6 weeks. Number two, it's a weekly gap, so it's the second longest time frame involved. Number three, we have lower value. And what did they do with it? Nothing. We had pretty much a void, right? I said down to 278.50 was the void. Well, we did get down to 279.13. We took out a bunch of reference points, but we never, ever got to 278.50. And then they just walked away. They absolutely just walked away. They just lost all interest in this marketplace. So, what did the buyers do? We just started playing the game. We had a nice buy tail. We got above the opening. There was certainly uncertainty in the opening, right? First four time frames. We didn't get there in E. And then it certainly looked like we were going to pop the high. I was looking for that. I was telling my room in D, in E, in E, F, G, we're going to get the high. Never got it. Took some heat. Again, there's another trade I can go over in G and H, but it worked out. And then finally, we popped the top. And then we do something which I really didn't expect. I expected us to get to the POC from Friday and then come back in. But no, we decided to go trend day up. So we have two sets of single prints, a price probe, and we still have one set of single prints left from the first. Now, does that mean the market's great? No, I don't think the market's great. I just think the sellers just walked away. The volume's horrendous today. Just under 74 million with the after hours. So, yes, we came back, but again, the volume was horrible. So we'll see how that transpires. I'm going to go over the trades and destinations first. Then I'll break down those one or two trades and then go to the charts. So, first trade I took today. A period opened. I didn't do anything right away. Got above the open and got below it. I finally took a short. Turned out to be a nice trade. I was looking for 278.50, never got it. Went down to 279.13, started coming back, took it off. Now the trade I'm going to go over is the one in B and C. I took a long, held it in B, held it through C. It was add-ons, it was outs, and everything else. I'll show you where and why I did them in a minute, but that trade worked out pretty nice. D came down now. We had, again, we talk about reversal bars. They used to be rare. Now we have at least one a day. We had three today. D, G, and K. And that means you take out both the prior time frames, low and high. That used to be an uncommon occurrence. We're seeing it now with regularity every day, more than once a day. So it's some major league head fakes. Now, somebody had asked me, do I want to short this below the open? I said I don't. I said if we take out C's low, I could see us testing B's low, but with that buy tail and the lack of energy the sellers had, they had their chance with the gap. I don't know how much you would get. But I still took that short as soon as we took out C's low, and boy, that was pretty much wrong. It was a small trade, got above the opening, I got out of it. It was a small loser. And it wasn't the right trade. At that point, even though the tempo on both sides were weak, the tempo on the downside was weaker than the upside. Took a long in E, again, as we started getting high to D. I was like, we're going to take out the high. Did okay in it, but we didn't take out the high. I took a long in H period. Looking for an afternoon pullback low. I started, G took out F's low. I did not get on board to sell it because, again, I was looking for a pullback. I might have even started in G. I write these things down so fast. But regardless, whether I started at the bottom of G or H, I took it. Now, I wasn't thrilled we went below the opening. But it flushed out so quickly and came back so quickly, and I just added on to it. So I continued to add on an H, and then it kept going up, took some off at POC, and then again, once I popped that out of that trade. Did another one in J. Once J popped I, I'm like, we're going to take out the high of the day. Didn't happen, still a good trade. Finally in K period, I got long again, and we took out the high, got out of it. I was very happy with that trade. Then I took one other trade that was absolute silliness on my part. In L period, we had single prints. I thought, now we hadn't taken out K's high yet, so it wasn't as bad a trade as I'm making it out to be. If L had taken out K's high right away, then came back in, I would have said that's silly because the momentum is still going higher. It didn't take out K's high. I thought we would come down and just fill the single prints. I took a rather large, not large, I took 50 contracts. That is rather large. And it went. I took very small off as it came in, then it went right against me. Took it off right around, I'm not sure if I waited to K's high or right above it, but it cost me. It was just a silly trade. And that was the last one I did on the day. All right, let's go over destinations, and I'm going to break down those trades. So for the upside, first destination will be today's high of 283.90. Then we have single prints. They start at 283.97, get filled at 284.16, so it's only 19 cents from Friday. Then we have Friday's high of 286.04, which is a daily high, and then filling the gap at 288.59. This gap, 255 points from May 1st, but inside of that gap, we have that naked POC of 287.46. So it's amazing that it's still standing there, but it is. For the downside, we went out with a price probe. So we closed at 283.59. L's high, so we closed even above it. It wouldn't have mattered, but L's high is your first downside. 283.40, the price probe, where buyers were. Then we have single prints. M's low, 283.04, get filled at 282.61, K's high. Second set starts at 282.25. That's L's low and gets filled at B's high at 282.11. Afternoon pullback, nope, I forgot to put in our POC. 281.28 was 9 wide. So that will be your next downside destination after the single prints. And that never got raised, by the way. And then we have 280.20 afternoon pullback low from today, and today's low of 279.13. Actually, let's go to the charts first, then we will come back and dissect those trades for people who want to stick around and watch them. Monthly. Well, 2 days into the month, inside month, one time framing down. Again, I'm going to say that's around, 281, 282. At some point we're going to get it way above it or below it where I'm not going to have to worry exactly where it is. But right now, I guess we could say we're above it, not by much. It's also only 2 days into the month. Weekly, here's where the big change has taken place. One time framing up for 6 weeks is gone. We are now in balance. I would probably make it a 4-week balance. Last week's high of 294.88, and then these 2 weeks lows, so 271.41. That would be my 4-week balance because that's my destinations now, right? To the upside, it's last week's high. To the downside, it would be these 2 lows. So here's your balance now on the weekly. So yes, it was a very nice move by the bulls today, but unless they close that gap I just talked about, and that's right around the top of the triple top we had initially at 288.52, for me, nothing's changed. Yeah, they had a very nice comeback today. Yes, we have single print, so we have a trend day. However, we're still firmly below 287. We stopped the one-time framing up. Bulls are going to have to do some more than to tell me that they're totally in control. Sellers aren't in control either. So basically, I'm going to have to say I'm neutral right now, right? If that's the case. And then in the daily, I'm calling this balance to down now because even with this rally today, we didn't come close to taking out Friday's high. So we're one-time framing down 3 days. The gap is still my main focus. However, we are inside this huge balance. So I'm just going to call it balance to down. Again, Nice comeback. But if they don't, if we go and take out today's low, well, then nothing's changed, and we're going to go right back down to the 50 and test those 2 weekly lows. If we take out today's high and then are able to fill this gap, well, then obviously something's changed and we can go back up here. But until we do that, again, I'm not convinced. All right, especially with this kind of volume that we put in today. So now let's go quickly to the profile so I can show you what I did. So first things first, we got to put these increments down to 1 because it's going to be a lot easier to see as we do these trades. So I'm going to go over, I'll go over B and C, which is really one trade, and then H period. So we're in 1 tick increments, so you're going to have to bear with me. I'm going to be doing a lot of scrolling, okay? So first let's start here, right? Here's where we opened. We went through the opening 4 times in A, B, C, and D, and then 1 more time in H. Now, so A drove down, right? We had the gap, but look at the buy tail. Yes, we got into it in H, but at the time in B, we didn't. So then we drove up, right? And then what happened? B comes, takes out the day's A's high, and when it did that, first things first, I said, I'm getting long. I'm getting long because the odds of filling the gap are very good. Well, we kept coming up back and forth through it. I bought a decent amount once we got closer because the odds of closing that gap were good. And it worked. Once it closed the gap, I got out of that trade because at the time, we don't know what we're looking at. Value was still lower on the day. But then B came in again, right? Got below the opening, got back above it. So I got long again. Why? Because we're one-time framing up. Okay? That's big for me. We're one-time framing up. So every time B went up, I would take some off because now we are looking at J's low as I's low is the next best big thing to get back into. So I would take it off up here, add it on down here. As long as we were staying above the opening in B, I was fine. Now, I took a big position, I'm going to say, I think it was around here, because the odds of filling the gap once we got into it were very good. That's why I took a big position here. But all those other trades, I start taking a smaller position. Now, C is the one. So once C opened and we come down, C came down, again, tested the open and went above it. I got long. Not a lot, but I did the same thing. The higher it went, once we started one-time framing up again, the reason I added, so I took that short in D period. It was a bad short. Once D came up and took out C's high, then I was like, okay, we are going, the odds of taking out the high now are pretty good. So D, and this is the one where I did the adding and was very comfortable with it. I started D's position once we took it out. As soon as we came back in, right around Friday's low. Bought like 10 or 15 contracts. Came back down, came in, bought another 10 or 15. Okay, so I'm averaging. Came in again closer to the opening again, but obviously, remember, we had taken it out. This happened earlier. So when we kept going back and forth, as long as we stayed above the opening, I added more. So now as long 15, 30, it came in, I probably bought, and again, I don't know the exact amount, so I forget, I bought maybe 30 or 40 now. So now I'm long 70 or 80. So now when it starts going back up, I don't need it to go all the way back up where I was because the bigger position I took was where I knew where my risk was going to get, whether I was going to hold this or not. If D came back down again, where it took out C's low, I'm wrong and I'm out. So if I'm buying the biggest position here, there's my risk on that. Yes, I'm still losing on the stock I bought here. Yes, I'm still losing on here. But the bigger position is here. And the momentum had changed. Why did it change? Well, we're above the opening again, especially in E, because I did this in E too. We never got to the opening in E. We one-time framed up again. So yeah, I bought small here. I bought small here. Then again, I added more down here. So I never needed the market to make a new high on the day at that time, because where I was adding, I never got in serious trouble on the big add-on. Does that make sense? So in D, in E, yes, I started higher than I would have liked, but I didn't do that just because I want to lose money. I did it because D, after taking out C's low, went back up and took out C's high. So even though it came back in, now I'm saying something's changed again. I still think we have a chance to take out B's high. That's why I kept adding in D. And then again in E, E took out D's high, came back in. Eventually I was like, we're definitely going to take this out. Well, obviously it took a lot longer than I had hoped. Now I got smarter. I didn't buy as high. I didn't buy anything in F or G. So if you notice, my long position in B, C, and E, those all worked out. But, shame on me if I don't start learning from my mistake, right? So B came in, I bought it. It took a while to go back up. C, I bought it, took a while to go back up. E, same thing. But this time, when they were going back up, instead of adding, I got out of it. I did nothing in F, did nothing in G, and then I did the same thing in H. I started buying it right around probably when we took out G's low. I'm like, I would like to hold the opening. We didn't hold the opening. Then, as soon as we got below the opening, it was a quick flush, but on very light volume. Here's the volume we did on that flush out. Look how it tapered off, 1,100 and 100, 1,900. That's nothing in SPY. Look at this volume. That's 75,000, 75,000. That's every penny. So as soon as it tapered off and started coming back up, I added more in H period. Because the odds now of going back to POC were very good at that time. So that's what I'm looking at and why I'm adding and taking off as the market's ebbs and flows go up and down. B period ran away pretty hard. Now, I got involved, like I said, around here to fill the gap, and I got out of it. I did not buy B period up here at all. I started buying B period again when it came down, and I thought we would hold Friday's low now, since we had that kind of acceleration from A to B. Obviously, initially, I was wrong, so I bought it, and I bought it. But finally, it did go back, and I got out. It did not even have to go back to where I started my initial position. Same thing in C. Opened, I bought it. Again, I bought most of it where I was comfortable buying it, down here, and got out of it as it went up. So that's basically how I add and take off, add and take off. And the reason I'm doing it that way is because the market's not trending at that time, right? We're basically rotational. So I'm kind of comfortable. It comes down, I buy it, goes up, I take it off. Once we go full trend, well, if I try to short that, and I did in L, I knew I was wrong and I got out. If I'd stayed in there, look what would have happened to me, right? It's all context. It's all on what the market's telling you at that time, why I'm doing what I'm doing or why I'm not doing what people think, hey, I should be doing this. I was very comfortable. Somebody had said at one point when I got long in, I think it was H period, because I stayed long in H and I. I stayed long in both. In fact, I added I. Somebody said, well, the internals are getting worse and this and that, and they were. However, context and tempo, the way H blew through the opening for the first time since D and got right back above it, and then I never got below it, spoke volumes of how weak the sellers were. And that's why I was comfortable being long and then take it up. Back to POC. So I don't know if that helps or not. Having the market profile in front of you is huge, because it's so visual and you can feel the tempo or lack of. You could see the acceleration or lack of. These are all things that are very important throughout the trading day. I hope it helps a bit. We'll go over some more in the future. Have a great night, and we'll speak prior to the opening tomorrow.